When the Strait of Hormuz chokes, the world stops. Micron is the only bridge to AI sovereignty. For every HBM chip born, 4 standard ones die. This is the structural slaughter of supply.
It's not often you see a company deliver a flawless performance and get punished for it, but that is precisely what just happened with Micron Technology. They reported record-breaking earnings, they absolutely demolished expectations, and yet the market's reaction was, well, a shrug. Today, we're going to decode that very paradox, because what looks like a simple market reaction is actually a high-stakes debate about the entire future of AI infrastructure.
All right, here's how we'll break it down. We'll start with the staggering numbers from the earnings report and the market's, frankly, bizarre reaction. Then, we'll uncover the hidden friction in the supply chain, this critical production bottleneck that's causing all the fuss. We'll then ask the big question, are we witnessing a permanent secular shift in the memory market? After that, we'll examine the very real strategic risks that are keeping institutional money cautious. And finally, we'll unravel the valuation conundrum that puts this entire puzzle into perspective.
So, first things first, let's quantify just how extraordinary Micron's quarter really was. And I want to be clear, these numbers aren't just good, they represent a fundamental explosion in the business.
Let's start right at the top line. We're talking about a 196% year-over-year revenue surge. Think about that. The company has nearly tripled its revenue in just 12 months. That's almost entirely fueled by this insatiable demand from the data center market. A truly monumental figure.
Now, this next number, it signifies more than just a simple beat. Micron delivered a non-GAAP EPS that was 40% higher than the Wall Street consensus. Now, that isn't a minor outperformance, that is a demolition of expectations.
And the thing is, this momentum is actually accelerating. Their guidance for the next quarter's revenue came in a stunning 45% above what analysts had even modeled. So what this tells us is this isn't some one-off event. The company is signaling that its hypergrowth phase is really just getting started.
And yet, this was the market's response. A drop of nearly 4.5% in after-hours trading. All of that record-breaking performance, all of that accelerating momentum was met with an immediate sell-off. This, right here, is the disconnect at the very heart of our story.
So that brings us to the central question, doesn't it? Why? What is the market seeing that appears to contradict these incredible fundamentals? Well, to answer that, we have to look a little deeper into the mechanics of what Micron actually produces. The answer, it seems, lies in a hidden friction, a core constraint very deep within a semiconductor supply chain that really complicates this seemingly simple growth story. And it's all about a product called HBM.
So what exactly is high bandwidth memory? The simplest way to think of it is as the turbocharger for an AI processor. You see, by stacking memory chips vertically and placing them right next to the GPU, HBM dramatically cuts down the time it takes to move data around. For these massive AI applications, this isn't just a nice to have, it is absolutely essential.
But here's where we get to the critical trade-off. A factory, a fab, has a finite amount of wafer capacity. So when Micron chooses to produce one of these sophisticated HBM wafers, it has to give up the capacity to produce multiple conventional DRAM wafers, the kind you find in our phones and PCs. It is quite literally a zero-sum game.
4-to-1. This is the ratio that quantifies the sheer scale of that trade-off. For the next generation of HBM, HBM4, which is being designed for NVIDIA's upcoming platforms, that trade ratio increases to 4-to-1. For every single HBM wafer, Micron sacrifices 4 standard memory wafers. This number is the anchor of the entire supply-side argument.
And this isn't just theory. As one Micron executive put it, this intense focus on HBM is creating a structural scarcity across the entire memory landscape. The AI boom isn't just creating demand for high-end chips, it's actively cannibalizing the supply for everything else.
And this supply constraint forces us to ask a much larger, more strategic question. Is the market applying old, cyclical models to a completely new paradigm? A paradigm where memory is no longer just a simple commodity.
So let's just lay this out. Historically, memory was a volatile commodity business, right? It was defined by oversupply and vicious price wars. The bull case here argues that this has fundamentally changed. Demand is now structural, driven by AI.
Supply is structurally scarce because of that HBM trade-off we just talked about, and purchasing has shifted from the spot market to long-term strategic agreements. In short, memory is no longer just a component, it's a core system enabler. And the proof? Well, it's right there in the order books. Micron's entire HBM supply for the next 2 years is already completely sold out. Hyperscalers are not making speculative buys anymore. They are locking in capacity with multi-year contracts, treating memory as a critical strategic asset that is essential to their AI roadmaps.
Of course, it's never that simple, is it? There is a powerful counterargument, and any sophisticated analysis demands that we address the bear case. So let's look at the legitimate headwinds that are fueling the market's skepticism.
First, there's the massive capital expenditure. Micron plans to spend over $20 billion in fiscal 26 alone. Now that raises very real fears of future oversupply. Then you have the relentless competition from giants like SK Hynix and Samsung. There's also the risk that hyperscalers, facing their own rising costs, could eventually pull back on their spending. And of course, we can never ignore the geopolitical risks that could disrupt these very fragile supply chains.
And you have to understand, this history of volatility, it's practically baked into the market's DNA. Just look at the 2019 bust, where a supply glut led to a 42% revenue collapse. Investors have seen this movie before, and the fear is that even an AI-driven supercycle will eventually face its own downturn. That question mark hanging over 2027 and beyond is what truly dominates institutional thinking.
Okay, so this all brings us to the final piece of the puzzle, the valuation. Because the conflicting numbers here, they perfectly encapsulate this entire debate and the deep uncertainty that's facing investors right now.
Just look at this table. It tells a completely contradictory story. On a trailing, backward-looking basis, the stock at 40 times earnings, yeah, it appears expensive. But then you look forward, based on projected earnings, and it trades at just 12 times, far cheaper than the sector. And when you factor in its explosive growth, the PEG ratio of 0.22 suggests it is deeply, profoundly undervalued.
So there it is. That's the entire conflict quantified. This massive valuation gap is the market's uncertainty made manifest. Either investors are correctly discounting that this explosive growth simply won't last, or they are fundamentally failing to price in a paradigm shift, one where memory becomes a strategic, high-margin asset for the foreseeable future.
And so that leaves us with the final definitive question. Is the market's skepticism a rational response based on the painful boom and bust cycles of the past, or by focusing on that history, is it missing the profound structural changes that AI is forcing upon the entire technology stack? That, right there, is the multi-billion-dollar question the market is trying to answer right now.
Skies of silent cold, steel and fire begin to glow. Old machines and markets fade, and new intelligence is made.
Travel through the wire, cold data centers breathing fire. In the age of silicon snow, a deeper power starts to grow.
They called it cycles long ago, rise and fall like winter snow. Commodity kings would come and go, but this time something changed below. Inside the circuits of the mind, a hidden limit they would find. Not the chips that think or learn, but the memory they must burn.
Every thought a river wide,
every model multiplied,
while the world washed quarterly tide.
A deeper engine slowly starts. If you control the memory, you control the mind. If you control the memory, you control mankind.
From the server halls of steel to the edge where machines feel in the silent and silicon sea. Scaling logic layer by one close straight, one broken chain, and the future stalls again.
Energy roaring through the grid, 70 gigawatts a minute. Cities built of light and code, feed the minds that machines hold. Electric storms of data streams, rising faster than our dreams. The price of power climbs the wall, yet intelligence wants it all. If you control the memory, you control the mind. If you control the memory, you control mankind.
From the server halls of steel to the edge where machines feel in the silent silicon sea, memory becomes the key.
Tokens rising through the night, machines learning how to write. Longer thoughts and deeper sight, expanding far beyond our light. 50 terabytes awake, new intelligence they make. From the Rubin engines born, a computational storm.
In the north of Silicon lands, guarded by unseen hands, stands a keeper of the gate.
Watching how the futures wait,
Not just chips and wafers thin,
but the memory locked within
every server, every core
needs the keys behind the door. Factories rise like iron towers, forged across the coming hours. What was once a market trade, now a fortress slowly made. If you control the memory, you control the mind. If you control the memory, you control mankind. Empires built in silent code, rising where the data flowed in the frozen silicon sea. Memory shapes destiny.
And in the age of silicon kingdoms, where machines begin to see,
The keeper of the memory becomes the keeper of intelligence. Under northern skies of silent cold, steel and fire begin to glow. Old machines and markets fade, a new intelligence is made. Whispers travel through the wire, cold data centers breathing fire. In the age of silicon snow, a deeper power starts to grow. They called it cycles long ago, rise and fall like winter snow. Commodity kings would come and go, but this time something changed below.
inside the circuits of the mind, a hidden limit they would find. Not the chips that think or learn, but the memory they must burn.
Every thought a river wide, every model multi memory, you control the mind. If you control the memory, you control mankind. From the server halls of steel to the edge where machines feel. In the silent silicon sea, memory becomes the key.
Helium drifting through the sky, printing logic layer by one close straight, one broken chain, and the future stalls again.
Energy roaring through the grid, 70 gigawatts amid cities built of light and code. Feed the minds that machines hold. Electric storms of data streams, rising faster than our dreams. The price of power climbs the wall, yet intelligence wants it all. If you control the memory, you control the mind. If you control the memory, you control mankind. From the server halls of steel to the edge where machines feel. In the silent silicon sea, memory becomes the key. Tokens rising through the night, machines learning how to write. Longer thoughts and deeper sight, expanding far beyond our light. 50 terabytes awake, new intelligence they make. From the Rubin engines born, a computational storm. In the north of Silicon lands, guarded by unseen hands, stands a keeper of the gate, watching how the futures wait. Not just chips and wafers thin, but the memory locked within. Every server, every core needs the keys behind the door. Factories rise like iron towers, forged across the coming hours. What was once a market trade, now a fortress slowly made. If you control the memory,